Hi, I'm Ross from Crimsmith Property Accountants, and we're just going to look at an example of a rental property today. This is just one that I've seen on Facebook. I haven't gone through the numbers yet. I haven't really looked at it, so we'll have a bit of a look through, see what I think, see what the numbers look like now and over the next 10 years. So I'm going to share this. This is just something that came up in my Facebook feeds. I'm not affiliated with iFind Property. I don't get a finder's fee or anything like that, but yeah, if you want to give me some money, I'm quite happy with that as well. So this property, it's in the Ruapehu district. So first thing we'd think about with that is, yeah, it doesn't have specifics, and you need to ask them more information, which is fine. But yeah, in general, you'd be looking at obviously Ruapehu. Pure Tura's bought the Tura side of the mountain recently. But yeah, Awakuni's still struggling a little bit, still a bit unsure. Whakapapa still not sold. There is apparently a bid around and something happening. But those ski fields, yeah, just that it's been a lot harder. There's been a lot less snow. It barely got over a 1 meter snow base this year. So Ruapehu, the mountain sort of area, is just struggling a little bit. So that would be something I would think about to start with. What's that area like? Then we're looking at the property itself. So from that first picture, actually looks reasonably good. The reasonably good conditions and things like that. You do have a big grass area, so you're going to have some more mowing costs. Potentially, maybe is there room to stick another dwelling on there, get some more income? I don't know. I don't know the site well enough, but that would be the sort of things we'd be looking at. So there's two houses on one site, which generally gives us a higher yield. It's got a bit of a rural outlook, which is fine. This property is actually on Airbnb at the moment and earning more from short-term accommodation. But yeah, we're looking at just from a residential rental property. If we don't do the Airbnb and just do long-term residential rental property, what does that look like, and how do the numbers stack up? So I'll just drag in my spreadsheet and we'll have a look. So from the information on iFind Property, you can buy it for 495,000. There's always some buying costs. You're going to do some sort of building inspection, set up a company, probably a valuation and other costs, maybe 4,000, and then you're going to get some sort of contribution, hopefully back from the bank, which covers most of that. So we're basically going to borrow 100%, and I always do my numbers on 100%. If you've got some cash to put in, that's fantastic, but you want a return on that money, so it's better to do with 100%. The rent they are getting, they're saying 420 to 450 per week for each of them, and there is two properties. So if we go in the middle, if we go 435 times 2, 870. Then we just need to be realistic. Are we realistically going to get 52 weeks? And just at the moment, I talked about straight away the ski industry, it being a harder market, harder area. So potentially you might just struggle to get those full 52 weeks. And that would be something, if I got serious on this, I would talk to a property manager. Hey, look, what's the demand like for two-bedroom properties in this area? What sort of rent can I get? Is the 435 a week realistic? And just check the demand, check that you can actually rent these. If you can, we're expecting 43,500 rent, divided by our 495 purchase price is 8.76% gross yield, which is a pretty good gross yield there, but you're taking on a bit of risk. Insurance, you got two houses, but they are lower level in a little bit of a cheaper area, but you're still going to be somewhere around 3,400 a year. Interest rate at the moment, 1 year from ANZ, fantastic, 5.59. We'll go with that. I've got property management at about 8%. Rates was actually in the listing at 6,141. Repairs and maintenance. The house is actually look in good condition, but they might need painting or something long term. So that's a reasonable cost. Also, we've got the big backyard, lots of grass areas, a bit more maintenance, and there's two of them. I'd probably be going maybe 4,000 a year as a quick guess, 40,000 over the next 10 years. Then I've got some education. Maybe you join Waikato Property Investors. A little bit of travel. Let's say we're going from Hamilton down. We're going to spend, yeah, at least $500 a year going down there once, having a bit of a look, and coming back again. So our first year, we're predicting 43 in, 48 out, losing about $5,000 a year. We generally then get a chattels valuation done from Valueit. They would value the chattels, the carpets, the curtains, dishwasher, stove, heat pumps, fences, deck, decks, all the different items we can depreciate. There's 2 houses, maybe 7,000 a year is pretty good. To start with, that's just going to increase our loss. And with ring fencing in place, if this is our only rental, that loss is just going to carry forward to next year, and it can only offset against other residential rental properties. So it can't offset against our PAYE income. We can't get a big tax refund, but it is going to carry forward. If we look over the next 10 years, my summary for this property is that we're expecting on average 4,762 positive, and that's on interest only. And that's actually not too bad. It's not amazing cash flow. I'd always love more, but it's not too bad. If we went principal and interest, minus 2,872. So you'd have to put in a little bit of money. So over the next 10 years, we're hoping that, yeah, you make $47,621, which is your cash surplus after tax over the 10 years. You're also then obviously hoping for capital gain on top of that. None of us know exactly what's going to happen. None of us know exactly when properties are going to go up in value, but you'd sort of be hoping for that. Historic average has been about 6.3%. Yeah, again, will that continue in the future? None of us know. So this is reasonable property. There's some reasonable cash flow there. It's not amazing. And what I'd sort of be looking at with this is it worth the risk of risking and investing in Ruapehu to make a small cash flow under 50,000 over 10 years, or is it better to go in a bigger area, more people, more jobs, more stable, and potentially have a slightly lower cash flow, but maybe more potential for long-time capital gain and maybe less risk? So yeah, hopefully you've enjoyed that. Hopefully you've got something out of that. Yeah, I do have full 10-year numbers. I sort of work out what it'll do over the next 10 years or predicted to. So yeah, I've got within those numbers, I've got things like rent slowly going up over time, 43 to 63, all that expenses going up over time, and I'm basing my interest rates on Reserve Bank. So I've got them 5.59, going down a bit next year, and then maybe settling around a 4.5% average based on Reserve Bank's predictions. But it is just a prediction, no guarantee that will actually be right. And I definitely don't expect it to go that even for all those years. It'll go up and down. They'll undercook it and overcook it. But yeah, basically we're looking at making a small loss to start with, then a bigger cash profit throughout the next 10 years, building to 15,000 a year, depreciation dropping, us making a taxable profit, paying a bit of tax, but yeah, not for quite a few years, not until about year 7 if we don't put money into it. So overall, yeah, those cash surpluses building up to $47,000 total. And my capital gain prediction, I'm pretty miserable and conservative, a bit lower than the past. I've got it going up 273,000, yeah, as a guess of capital gain of what that could be. So a little bit of cash, a little bit of capital gain, it's sort of okay. And I always look at the next 3 years, negative 5,000, negative 1,500, positive 2, minus $4,000 over those first 3 years. That's actually pretty good cash flow. So not a bad cash flow property. Would I really buy it? I'm probably just a bit concerned. I'm personally already got a property at Ruapehu, so I love the snow. So I'd be cautious to buy something else down there. But yeah, I would really be investigating that market, the demand. Is that rent available? What happens if one of the ski fields closed down? How would that affect everything? So hopefully you enjoyed that. Hope you got something out of it. Thanks a lot. Bye.